on issues of significance to progressive America, to America, in fact, during his short time in the Congress. We've seen week after week, month after month, Representative Cohen has come to the floor of the House of Representatives, the People's House, and boldly articulated a progressive vision for how we can deal with some of the problems that we confront today in America. And certainly when we talk about wrapping our arms collectively around the issues of great significance to this country of ours, dealing with the crisis in higher education is of utmost importance. And as Representative Cohen has eloquently laid out, if the Congress does not act by July 1st, more than 7 million Americans will face a doubling of their student loan interest rate from 3.4% to 6.8%, increasing an already heavy burden as it relates to their college education. Why is it important that we address this issue? Well, one, the cost of a college education in America keeps going up, but the amount of financial aid available to these students keeps coming down. And so college and higher education, which is a pathway toward the American dream, is increasingly out of reach for low-income Americans, for working families, for the sons and the daughters of the middle class. Why is this troubling? Well, it's troubling because it's clear that going to college makes sense as it relates to creating a better future for Americans. And this chart that we have illustrates the point in a very compelling way. Education pays. This lays out the median weekly earnings of individuals at different levels of educational attainment. Now, with less than a high school diploma, you earn approximately $451 a week, and your unemployment rate is in excess of 14%. If you've got a high school diploma or a GED, you'll make around $638 per week. You still have a very high unemployment rate, on average 9.4%. If you get a bachelor's degree, your weekly earnings increase exponentially to $1,053 per week, and your average unemployment drops to 4.9%. And if you were to take that a step further and obtain a professional degree, your weekly average earnings increase to an excess of $1,600 per week, and the collective unemployment rate drops to 2.4%. Education pays. And that's why, for the good of America, we support the position that we should invest in young people, help facilitate their pursuit of a college education. It will benefit them, it will benefit their families, it will benefit the communities from whence they come, and it will also, of course, benefit America. But today, as was indicated by Representative Cohen, we have a student loan debt crisis that we confront in America. Student loan debt is now second only to home mortgages in collective debt as it relates to the American people. It was staggeringly high just a few years ago, $650 million or so. It now exceeds $1 trillion. It's a crisis of incredible proportions. Now, similar to Representative Cohen and the distinguished gentleman from Pennsylvania, Representative Cartwright, we've only been here for a couple of months, but it's been clear in that relatively short period of time that there are many in the People's House who consistently talk about the notion that the debt that we have in America is a moral imperative for us to get it under control. It exceeds $16 trillion. They blame President Obama for that debt, and that's why we have an irresponsible fight every time there's occasion to raise the debt ceiling. And I don't want to dwell on that fact, but parenthetically I will note that we're in the situation that we're in today not because of assistance that the government has provided to those seeking higher education or other positive domestic spending programs. We're in this situation, that $16 trillion debt situation, because of some irresponsible decisions that were made during the 8 years of the previous administration. That's just the facts. But they'll talk, some of our good friends on the other side of the aisle, about this moral imperative to deal with the debt that we have in America. How dare we shoulder future generations with such a burden? But then, when it comes to the more than $1 trillion debt burden that is actually being shouldered by younger Americans, what we've gotten is an irresponsible bill, H.R. 1911, that will actually make a bad situation even worse. As Representative Cohen indicated, I've introduced legislation that would freeze the current interest rate at 3.4%. There are other ideas on this side of the aisle, all designed to deal with making sure that as many Americans as possible can go to college, that it is affordable, and they can leave college with a minimum amount of debt so they can accelerate their entry into society as productive Americans. That's really what we want, because the higher the debt burden that the average American faces, young American, the more likely it is that they'll put off consumer spending decisions that are important to our economy, such as the purchase of a home. They'll put off, because of their student loan debt burden, starting a family. Many who might otherwise be future entrepreneurs create startup companies that may become the next Google or the next Yahoo or the next Facebook, may put off those decisions because they need the certainty of a job that will help pay down this debt. And so there are a lot of complications that are created as a result of the trillion-dollar debt burden that we have in America. And so how are we going to deal with this problem? Well, the GOP proposal, as I mentioned, really will make a bad situation worse. Under the current interest rate, 3.4%, over the next 5 years, someone with a subsidized Stafford loan would have about $4,174 in debt. If we did nothing and allowed the increase to take place on July 1st, that same individual would have $8,808 in debt over a 5-year period. But with the GOP proposal, H.R. 1911, the student would be in the worst possible position, in excess of $10,000 in debt. This is not an appropriate approach for our future college students, for younger Americans, for this great country of ours. And that's why we're urging the rejection of H.R. 1911. Let's come to the table, have a discussion that allows younger Americans and our college students to benefit from the historically low interest rates that exist, and allow them to pursue the dream of a college education so they can grow and prosper and benefit the good of the country. I yield back to Representative Cohen.
Well, and thank you, Representative Jeffries, for your leadership on this issue. Your bill, which I am very proud to be a co-sponsor of, and I think it's fair to say that the students, college students and the aspiring college students, not just in New York but across the country, owe you a good kind of a debt for the work that you're doing. And thank you so much for continuing to expose what we need to expose, which is the bill before this body tomorrow will cost $10,000 in interest more than it has to, because it is worse than if we simply did nothing and let the loans double on July 1. We need to act. We have bills like Representative Jeffries' bill to do that. I would like to share one story, and then I'd like to introduce another colleague of mine from One Wisconsin Now. OneWisconsinNow.org has collected these stories, and this is a story from a woman in my district named Alexandra. Let me read what she says. I'm 27, and my student loans forbid me from living in a safe neighborhood. I have to live where there is cheap housing and must live with a roommate. I can't afford a car payment and don't have one. I live paycheck to paycheck and virtually save no money. I have a great job, one that I worked very hard to get, and 3/4 of my entire paycheck goes towards my student loan payments. I live every day worrying that someday my student loans are going to get the best of me financially. I'm very close to defaulting on my loans. I fear never having the opportunity to buy a house or a car, invest or have a savings account, have a family, or pay for my children's education. I fear the thought of merely surviving. I have to live with that fact that this will likely be my life for the next 20 years. Alexandra, thank you so much for sharing your story with One Wisconsin Now so we can share it here today. You're not alone. I have a lot of stories from people in Wisconsin who've shared the exact same story, that the current pace we're on, if we don't fix student loans and the cost of education, we are going to put so much extra burden on your generation and the next generation that, again, you will not have the opportunities that many of us have had towards buying a car, buying a home, getting your family jump-started. So this is a crisis. It's a real crisis right now, and we need to address that. I have another colleague I'd like to yield some time to. Representative Matt Cartwright is another one of our freshmen from the Pennsylvania. He's also the freshman class president for the Democrats, taking on a leadership role among our body, and he has been an outspoken advocate for the middle class in this district, in this country, and especially for those voices in Pennsylvania. Mr. Speaker, I'd like to yield some time to Mr. Cartwright.
And I thank you, Mr. Pocan. Mr. Speaker, talking about the middle class is something that isn't done enough of here in this chamber. The middle class is something that makes America what it is. The middle class is something that speaks to Americans and says, come join us. We represent opportunity in this country. We represent the ability to achieve more, to realize the American dream. It's the middle class that makes America different from so many other nations in this world, and it's the middle class that we must work overtime to make sure we preserve. Because if we lose the middle class in this country, we lose the sense of opportunity, the sense of hope, the sense of upward mobility. We lose an essential element of what it is to be Americans. We have to do everything we can do to preserve the middle class, and one of the biggest, stoutest pillars of the middle class is our education system in this country, including the higher education system. I rise, Mr. Speaker, in opposition to H.R. 1911 on the floor tomorrow. Nominally, it is called the Smarter Solution for Students Act. I call it, and many of my colleagues call it, the Make College More Expensive Act, a much more accurate title for this bill. According to the Congressional Research Service, this bill, H.R. 1911, students who borrow the maximum amount of $27,000 of unsubsidized and subsidized Stafford loans over 5 years would pay $12,374 in interest under H.R. 1911 or $10,867 in interest under current law if rates are allowed to double to 6.8%, or $7,033 if rates stay at 3.4%. Keeping the interest rates where they are will save our students nearly $5,000. And for that reason, I co-sponsored Representative Joseph Courtney's bill, H.R. 1433, which will extend these low rates for at least 2 more years. And that's the fair thing to do. That's the decent thing to do. It's the American thing to do to protect the middle class. This is the approach that we need now, with costs of college rising and student debt expanding at historically high rates. Let's examine the facts. The total outstanding student loan debt in the United States has surpassed the $1 trillion mark. This is a figure that has outpaced credit card debt, auto debt. It's second only to mortgage debt in this entire nation. A recent study shows that student loan debt is the only type of consumer debt in the United States of America that has actually increased during this Great Recession. And the problem only continues to grow worse. As a result of these debts, millions of Americans cannot buy cars, purchase new homes, start businesses, or do the other things that mean realizing the American dream. It's a terrible time for young people. It's a horrific time for young people. Talk about the employment rate for young people. The unemployment rate in April for people between the ages of 16 and 24 was 16.2%, more than double the national average that we read about in the newspapers. According to a recent study commissioned by Demos, nearly 45% of unemployed Americans are between those ages of 16 and 34. The study also stated that 4.7 million young Americans are underemployed, working part-time, when what they really want to do is get full-time, family-sustaining, good-paying jobs. They don't have them. The result? Young Americans are either unemployed or underemployed and will likely lose a combined $20 billion in earnings over the next decade. That's from the Center for American Progress. Raising their college interest rates is going to further impact their ability to purchase homes, cars, pay for their children to go to school, further dragging down our dragging economy. This is all on top of the cost of college. The average published tuition and fees for in-state students at public four-year colleges in this country increased by 66% beyond the rate of inflation between 2002 and 2003 and the 2012-2013 academic years, 66% beyond the rate of inflation. For private colleges, the tuition and fees increased by 27% beyond the rate of inflation in that comparable time period. Since 1982, the cost of college tuition and fees is up 582%, twice the rate of medical care, which is also exploding, as we all know. To help provide students and parents greater transparency as to the true cost, what a college education in total will cost, I introduced last week H.R. 2020, the Truth in Tuition Act, which will require schools to either present each incoming class of students with a multi-year tuition and fee schedule, or give each student a non-binding estimate of what their education will cost them individually. H.R. 2020, the Truth in Tuition Act, would require schools either to present each incoming class of students with a multi-year tuition and fee schedule, or give each student a non-binding estimate of what their education is going to cost them individually, taking into account tuition, fees, and that particular student's financial aid package. In this bill, there are no price caps, and it does not freeze the price of tuition. Schools are free to set tuition rates as they see fit. This legislation will help students and families plan by laying it out in front of them what they can expect the entire cost of the college education to be, and make sure colleges and universities give every student a clear picture of what their degree will cost. Now, responsible colleges and universities are already doing this, and this is already the law in the state of Illinois. This is already happening. But it's the non-compliant, it's the colleges that maybe aren't going the extra mile to inform the students of what kind of fees and costs in tuition that they're facing during the whole course of their university or college career. It's the colleges and universities who are not revealing this that this bill is addressing. This legislation will help students and families plan for higher education by making sure that they get a clear picture of what the degree is going to cost. It's also going to cut down on excessive tuition and fee fluctuations. It's going to help rein in skyrocketing college costs, and it'll encourage colleges to maintain some kind of level, non-fluctuating tuition schedule so that surprises don't happen to the students. It'll also slow college dropout rates in this nation. Colleges all across the country are experiencing dropouts for the very reason that the students didn't expect the tuition and fees to be raised the way they have been. The cost of a higher education and the debt carried by our recent graduates have skyrocketed across the last decade. It's the cost of the tuition and it's the interest attached to the debt that are the crippling features of this. Without having a full picture of college costs, students and their families are forced to take on more student loan debt than they originally anticipated. This bill, H.R. 2020, the Truth in Tuition Act, helps stop the uncertainty. And a further advantage of it is pricing that colleges will think ahead about costs and have incentives to develop more restrained budget growth plans. Ultimately, advertised long-term pricing may encourage some colleges to limit their tuition growth voluntarily. In the event of severe economic hardship on the part of the college or the university, a dramatic reduction in state aid for higher education, or other exceptional circumstances, this bill provides a waiver for the Secretary of Education to be able to issue to make sure that the schools are not detrimentally impacted. Mr. Speaker, I oppose H.R. 1911 because it allows the costs of college and university education to get out of hand because of interest rates, and I'm introducing H.R. 2020, the Truth in Tuition Act, in order to restrain costs to begin with. Doing both of these things is something we need to be doing in this chamber because it is buttressing the foundation, one of the foundations of the American middle class, allowing young people to complete the educations that they hope to complete, to become the people they want to be, to train themselves and to equip them to compete on a global scale, and to achieve the American dream ultimately, a dream that everyone needs to be able to achieve in this country, because once we start letting go of that, we start letting go of what this country is, the United States of America. And with that, I yield, Mr. Pocan.
Thank you, Representative Cartwright, and thank you for your leadership on the Truth and Tuition Bill. How apropos to be numbered 2020, to give a good direct vision on the reality of costs in higher education. And, you know, I can say one thing from being a state legislator for 14 years before I came here. I served during the period when the federal economy collapsed and states had less and less money to invest in public universities. You know, so often you hear about the rising costs in private universities, but even a system like UW-Wisconsin, which is one of the premier world-class university systems, the costs have gone up enough that it's harder and harder for that average person to be able to afford the education. So when they rely on the loans, and if the interest rates double, or worse yet, we pass 1911 and make them increase even more, you're taking that affordability out of even more people's hands. I just want to share a very short story, another story from someone who posted it on my Facebook page, and then I'd like to introduce another person on this issue. I asked for comments on a Facebook page, and I got a comment from a woman named Amber, and it's just short, but it's poignant. I haven't yet started paying back my loans. I graduate in July, and as a single parent, I'm terrified I'll have to choose between feeding my children and paying my loans. My children will come first, but it still worries me that I'll be strapped beyond what I can make at work. This is unfortunately what we're doing to the people who are currently graduating from our education, our higher institutes of education across the country. Next, I would like to yield some time to a colleague of mine, a very experienced colleague, a well-respected colleague, a leader among progressives in this body, currently the co-chair of the Congressional Progressive Caucus, and an outstanding legislator from the neighboring state of Minnesota. I would like to yield some time to Mr. Keith Ellison from Minnesota.
Well, thank you, Congressman Pocan, and I want to say, Mr. Speaker, that this is an extremely important topic, and I just want to say, Mr. Speaker, that you should look at legislation like a sailboat on a still pond. It takes the American people, the wind, to move that boat sailing along. And on this student loan issue, and on the access to education in this country, we need the American people, Mr. Speaker, to rise up and lift their voices and say, we demand affordable secondary college education. You know, there are great ideas. Congressman Cartwright has a brilliant idea, the Truth and Tuition Act. Certainly superior to H.R. 1911, which is just deepening and worsening the problem of college affordability. But at the end of the day, the best ideas will sail when the students and the parents across the United States, Mr. Speaker, come together and say, we insist on quality, affordable education. Do you know that there are at least 20 million borrowers across the United States for higher ed every year? About 20 million people borrow money every year to go to some form of higher ed, for-profit, non-profit, privates, whatever. It's a lot of people. And the fact is, Mr. Speaker, is that if those people, just them, said, you know what, these interest rates are not fair, this tuition is not fair, we deserve access to higher education, it would change everything. You know, 37 million people owe. 37 million people owe some sort of tuition payment, and about 5 million of those, according to statistics I have, are late by at least 1 month. If those people came together and said, you know, we're going to form ourselves into an organization and we're going to demand better terms, they could move mountains. But this is a civil rights issue. Now, I'm not talking about a color or a gender or a sexual orientation or anything like that. I'm talking about Americans, middle-class people wanting to be part of the American dream. And let me wrap up by saying this, Mr. Speaker. Mr. Pocan, you've been doing an awesome job with the progressive message. But I think that what we're doing with the progressive message is trying to help the American people imagine America as a generous, inclusive society that accepts people from all walks of life, and that it preserves the ladder of opportunity up. We believe we should have early childhood education so that the young ones can get a head start on a good life. We believe that in solid quality K-12, then the kids should have nutrition and be safe while they're at the schoolhouse. We believe that when they get to college, they should be able to seek their dream and be who they want to be, as Mr. Cartwright so eloquently said. And we believe people ought to be able to pay fair when they're in their adult life and take care of their family and have some, be able to go to the doctor. And we believe when people reach their golden years, they ought to be able to retire with dignity. And so we protect Social Security. Cradle to the grave, American dream and prosperity. It's not too much to ask for in the richest country in the history of the world. But a key link in that quality life of prosperity in this country is college affordability, and it is something that if you want it, you got to fight for it. Nobody's going to hand it to you. And when Americans wanted to see civil rights before the law, they wanted to see African Americans have civil rights, women have civil rights, when they wanted to see people on the job, workers have some voice on the job, they stood up and they said, we got to rearrange this deal. When we said that our environment was getting poisoned and dirty and they needed to demand that industry do something to make sure we had a cleaner environment, people stood up, Mr. Speaker, and they did something about it. And this is what we've got to do right now. So I just want to say to you, Mr. Pocan and Mr. Speaker, that this is an excellent opportunity to raise key issues about a central issue of American prosperity for working and middle-class people. And I yield back to my time and do thank the gentleman from Wisconsin.
Well, thank you very much, Representative Ellison. Your leadership for many years in this body has been well appreciated. And thank you for bringing back really the central theme of the Congressional Progressive Caucus. When we had a budget forward, it was the back-to-work budget. It's about funding on behalf of the middle class. We saw this Republican budget in this House balance the budget on the backs of the middle class, but our budget had the backs of the middle class and those aspiring to be in the middle class. And one of those fundamental equalizers is that opportunity to get a higher education, to advance in society, to change your economic outlook. I grew up in a lower middle class family. I not only had student loans, I also had Pell Grants. I was fortunate. But back when I went to college, you were still able to pay back your loans in often about a 5-year period. But growing more and more, it's a 10-year, 20-year payment back in order to be able to afford those rising student costs. And that is taking a bite not only out of the current economy, but out of the opportunities for those people getting those degrees so they can improve their lives and their families' lives and rise either into the middle class or to better their lives overall. So the Congressional Progressive Caucus has had this as a central focus. How can we help lift those in poverty to the middle class and help those in the middle class to have every chance at opportunity that they should have? Those student loans are a crucial part of that. If we let this bill pass, 1911, tomorrow in this body, we will put a financial burden on the backs of those who need it the most, those who are taking out loans to afford college. And if we do nothing as a body, the interest rate will double from 3.4% to 6.8% come July 1. Congress has to act. Now, this body has been able to vote 37 times to try to repeal the Affordable Care Act and the benefits to America's families from the Affordable Care Act. 37 times. Yet we have not found a way yet to fix the student loan crisis. And we simply need to do that, and that's why the Progressive Caucus is fighting so hard for that. I would like to close with one final story. Again, One Wisconsin Now had collected some stories, and this is from a woman from Wisconsin named Diana, and let me read her story. I graduated from a 4-year college in 2006. Today, 7 years later, my loan payments are over $600 per month. To put that in perspective, our combined household income is roughly $48,000 per year. That's 15% of our income before taxes. That's money that's not going into our retirement funds, not going towards a new home, not going towards a child's college fund, and certainly not going back into the economy in a productive way. My husband and I have been forced to make major life decisions based on my student loan debt alone. Unfortunately, there's no end in sight in regards to my student loans. My interest rates vary from 4.5% to 11.25%. Some of the payments I make cover interest alone. My principal balance hasn't changed in months on some of my private loans. This is not what I envisioned when I was applying for the colleges my senior year of high school. These are the real stories from people in Wisconsin, but they're no different than the stories from people across the country. We have heard tonight, and I want to thank Representative Jeffries from New York, Representative Cartwright from Pennsylvania, Representative Ellison from Minnesota, for coming and sharing those strong words about why we need to address this issue and why it's such a crucial issue, not a Democratic issue, not a Republican issue, not an independent issue, but an American issue, especially for those in the middle class and those aspiring to be in the middle class. We need, Mr. Speaker, to act on this. Mr. Speaker, we need to act on this soon, before July 1st. But, Mr. Speaker, I'm sorry, but 1911, the bill before this body tomorrow, will only make the situation worse. I urge my colleagues to vote against it. And, Mr. Speaker, I yield my time back.
The gentleman yields back. Under the Speaker's announced policy of January 3rd, 2013, the Chair recognizes the gentleman from Texas, Mr. Gohmert, for 30 minutes.
Thank you, Mr. Speaker. And it may surprise some of my colleagues. I agree with so much of what was being said with regard to the cost of education and how we need to be very sensitive to that. I was concerned about the vote we were going to cast tomorrow on that would prevent the interest rates from going up to 6.8%, as they're going to do if this body does nothing. And I was very concerned about it going up to 6.8%. And then I understood the proposed Republican bill that we're going to take up tomorrow will not let it go up to 6.8, but I was wondering why we didn't just leave it where it is. Let's just extend it. The Democrats set in motion when they were in the majority this situation where it was going to raise, and actually it was going to raise last year, and we voted a year ago to just extend the current rate for a year. And as I've had members of my own leadership and whip team pushing me on the issue, wanting me to vote for the bill tomorrow, I've been trying to find out more and more about why is this provision in there? Why are we doing this? And it was very clear. I mean, the interest rates for student loans is going to go up to 6.8% if we do nothing, because that's the law that was put in place. Well, I said, why can't we leave it where it is? And the explanation was given because the Democrats, in what they put together to pay for Obamacare, actually were counting on, and they got CBO to count on using the difference between the current rate and it going up to 6.8%, as the Democrats were counting on it having done. So on the one hand, my friends expressed the same concern that I have about the interest rates jumping up that high, going dramatically to 6.8%. And then on the other hand, they were not explaining that the reason that it was going to jump up so high if we do nothing is because Democrats were counting on that as a way to help pay the massive billions of dollars that are going to be required for Obamacare, even though people are going to get less insurance, less care, and have less say about their care. It's still going to cost billions and billions more. And in fact, CBO has indicated, you know, gee, they originally scored it under, let's see, over $1 trillion, and then the president said, called Doug Elmendorf over from CBO and explained, apparently, said something to him in the Oval Office, because then when he went back, magically, they were able to lower it under $1 trillion, as the president said it was going to cost. And then after it passed, CBO comes back, oh, you know what, we were right the first time. It's going to be more than $1 trillion, and then it was going to be $1.6 trillion. Others are saying it may be $2 trillion. Who knows how much? But it's going to cost massive amounts more. There are going to be massive taxes, according to what the Supreme Court calls it. We didn't call it taxes. But that's what the Supreme Court said that the Democrats did when they passed Obamacare without a single Republican vote. And they were counting on the increase, tremendous increase, the billions of dollars coming from increased interest on student loans raising. Now, if you go back just a little bit, well, why in the world is the government even involved in the student loan business anyway? We didn't used to be, as the federal government, a bank that just loaned people money on a regular basis. Well, when the Democrats were in the majority, they pushed through a bill that forced all lending institutions out of the student loan business, and the government took over the student loan business. Well, if this is going to totally cease to be a government that is of the people, by the people, and for the people, and not moving toward tyrannical despotism, then we have to allow people to have private property. We have to allow the free market to reign. We have to allow individuals and banking institutions to make the loans. But oh no, our friends across the aisle decided we're going to shove the free market out of the student loan business, and we're going to take over student loans, and we're going to set it at a low rate, but it's going to go up, and we'll use the billions that come from that magical increase down the road to pay for Obamacare. And that's how part of it supposedly was paid for. Well, one of the things I learned the hard way while our friends, the Democrats, were in the majority for 4 years was that actually the first Congress they were in the majority, they passed a pay-as-you-go bill, or PAYGO they called it. I voted for it. And I got criticized by Republican leadership. Don't you know that they don't mean what they say? This doesn't mean they're not really going to pay for anything. It's just a game. And I said, how would I not be for paying as we go? It's what their bill said. And then I learned the hard way on that, because then I saw they really weren't serious about it. Because bill after bill came to the floor and we said, well, but you put a rule in place. It has to be paid for. You have to come up, oh, but we're waiving the pay-as-you-go requirement on this bill. What about this other one? Well, we're waiving the pay-as-you-go. And so I was shocked to find out, apparently our leadership, the folks that had been here for a longer period of time, had already learned, and I learned the lesson the hard way. So the next Congress, when they came up with a pay-as-you-go bill, I said, are you kidding? You fooled me last time. I thought you were serious about it. I'm not going to vote for a bill that you have no interest in actually following through and doing exactly what the bill says. I'm not going to vote for a bill like that. I'm not going to help participate in the charade. But when it comes to Obamacare, they say, oh, it's paid for, and this is one of the magical ways that billions of dollars were projected by CBO to be produced. Well, they're going to do it on the backs of students. Well, we had control, the Republicans did, of the Congress in the previous 2 years. And a year ago, we said, well, let's just keep it at the current rate and move it forward a year, and we'll do something a year from now. So my Republican friends, when trying to persuade me to vote for this bill tomorrow, said, look, the student loan rates will stay where they are for now, but yeah, eventually they will go up some, but the good news is they won't go all the way up to 6.8. And I said, why do they go up at all? They said, because we promised we're going to pay as we go, and we meant it. But we're not going to go all the way to 6.8, so we actually have a shortfall we're going to have to come up with, because the Democrats were counting on these billions of dollars coming off the backs of students to pay for Obamacare. So as all of this has become clearer and clearer to me tonight, well, earlier late this afternoon, this evening, I've been communicating back and forth with my staff. So we have a bill that my Democratic friends ought to be thrilled to death about. And we're going to file it first thing in the morning. And it ought to excite my friends across the aisle. And I know my own leadership has been wanting me to vote for this bill. But they say the reason the rates have to go up at all is because under the budget previously done for Obamacare, to pay for Obamacare, the Democrats counted on this revenue. And so since we don't want to increase the deficit spending, we're going to have to let the rates go up a little bit, but we're not going to let them go up to 6.8 as was originally put in place by our Democratic friends. So anyway, what my bill will do that we'll file first thing in the morning is say, you know what, we're going to keep the current rates right where they are. And I hope folks will join me in encouraging my leadership to bring this bill to the floor, my bill to the floor, instead of the one we're going to vote on tomorrow. If we have to wait 72 hours, fine. Let's do it 2 weeks from now. We got the time. And my bill will leave the rates right where they are for a 2-year period. And since we don't want, number one, we don't want the rates to go up for college students. We're sorry that the Democrats ever figured that in as part of the process of paying for Obamacare. And since we don't want it to have to go up on the students, those who are having to borrow money to pay for college, then the way we keep from increasing the deficit spending in the bill I'll file first thing in the morning, we eliminate the Obamacare slush fund, and the billions that are eliminated for the slush fund for Obamacare will no longer have to come from the backs of young people who cannot afford to go to college without loans. That's the solution, and I hope my Democratic friends will hear and get word about this great bill, because I believe what they were saying. They're serious. Even though their party passed a bill called that we refer to as Obamacare, certainly not Affordable Care, but they passed that bill by themselves without any Republican votes, because we knew how bad it was. We knew how much it was going to cost. We knew you wouldn't get to keep your insurance if you wanted it. We knew you weren't going to get to keep your doctor if you wanted it. We just saw all those terrible things that are now coming to pass, and it will prevent Obamacare slush fund, the money that's set aside in the Obamacare bill. It'll just eliminate the slush fund and say to the Democrats, you never should have had that slush fund, and you're not going to pay for it on the backs of those who can't afford to go to college without getting loans. Now, I did have to double check with regard to this bill. I had to make sure that I wasn't going to be voting on something that affected loans that my wife and I have my wife and I are paying our children's student loans. Because before I ever ran for office as a judge, my wife and I had set aside enough money that it was going to take care of our kids' college. But by virtue of running for office and taking a huge cut in pay, we ended up having to utilize that money for our families. for our family and for our girls and for expenses. And so my wife and I are paying our kids' student loans because I didn't want them to have to suffer with a bunch of student debt because their father felt a calling to go into public service. But it would not be appropriate for me to vote on a bill that affected the rates of loans that we're paying, and it is now quite clear that that's not the case. The student loan bill that we're going to vote on, whether it's the one tomorrow or whether it's the one that I will file tomorrow that I would prefer that we do, either way, it will not affect one iota, not at all, loans that are already in place, student loans. So I'll be able to vote. And anyway, I've been whipping with our own team, undecided, and then later today was leaning no. And the more I found out, the more it's convinced me we really should not allow the Democrats pushing through Obamacare and the massive trillions of dollars that's ultimately going to cost to have any part of it forcibly borne by students, by young people that just want to better themselves by getting a higher education and having to get a loan to do it. So I have taken the things my friends said to heart, and I am counting on them to have meant what they said, Mr. Speaker, and so I'm hoping they'll agree in the morning to co-sponsor my bill so that they can be consistent with the things they promised. Now, it does defund the Obamacare slush fund, but since that was originally going to be borne on the backs of college students, then I'm sure they don't mind that going away. And with regard to taxes, let's face it, if the money costs the federal government an amount down here, and they have an interest rate that's higher than the cost of the money that the federal government gets to loan to students, then the federal government's making money on that, and that's what the Democrats knew, and that's why they counted on the higher interest rates to help pay for Obamacare. So anyway, we will, hopefully we can work together and get that accomplished. Because let's face it, it shouldn't, that kind of expense should not have to be borne, because really it becomes a tax. It's revenue, new revenue for the federal government. And then I'm hoping before the end of the 2 years, if we would do my bill, I would hope that before the end of the 2 years, we can do what should have been done in the first place, and that is get it back to the private sector where we become referees again as a federal government to make sure that neither lender or borrower are cheating. That's what we're supposed to be. We're supposed to be a referee. But over the years, through both Republican and Democratic majorities, the government has continued to move from the realm of being a referee to being also a player and also the coach as well as the referee. And it's hard for anybody to ever compete against a player who's coached and refereed by the opponent. Government shouldn't be in that business of being adversaries, opponents, or competitors with the private sector. It shouldn't be. So I would hope that we will get to a bill that puts all the lending back in the private sector where the federal government's no longer the lender. I hope we can do that with different kinds of insurance. Get it out of the federal government, because invariably when the government controls everything, it's just what we've seen that with the IRS scandals. You're going to have some abuses where people that would control all of your health care records, people that will make the decisions on what health care you get, people that can actually come in and take your home, the only people that can come in and take your home, the only people that can come in and seize assets without proper due process of law, the IRS. It needs to be dismantled, and I hope we can do that. I hope we can get to a place where we're no longer the bureaucracy that becomes so autocratic that it could care less about people's personal feelings. Oh, yeah, people come here on the floor of the Congress, talk about people's personal feelings, but when you see the big monolithic government that's just gotten so big, it doesn't care about people's feelings. It's hurting people right and left. Sure, the president had private sector leaders stand up and talk about how great Obamacare was going to be, and now they've been finding out it's not going to be so great. You're not keeping your insurance. You're not keeping your doctor. You're going to get less health care. You're going to get less insurance. It's going to cost a lot more. And with regard to the IRS scandal, we had Ms. Lerner come before committee. I was in judiciary. We were doing our own hearings on other matters. And I heard some of her statements about how she didn't do anything wrong. She's not guilty of anything. Well, as a judge and a Chief Justice who was very familiar with the Fifth Amendment, and as a judge who had to advise defendants, now you understand if you say anything at all on your own behalf, you have waived your Fifth Amendment right, and you will have to answer questions, and you will not be able to claim the Fifth Amendment. So what did Ms. Lerner do today? She came in, said she didn't do anything wrong. She followed the law in all ways. Oh, she was just a paragon of virtue. Well, then she waived her right to claim the Fifth Amendment before Congress, and she needs to be brought back up here and have that explained properly. You waived your right when you started telling us how virtuous you were, so now you're going to answer questions, because you can't have it both ways. You can't come in here and say to this Congress, I did absolutely nothing wrong. I violated no wrongs. I'm in no danger of having violated any laws, and then turn right around and honestly say, I'm not going to speak because what I say is going to tend to incriminate me. Well, it can't incriminate you if you didn't do anything wrong, so go ahead and testify. You started out, so go ahead and finish up. Sure, you can go out on the street and say, I didn't do anything wrong, but when you come before a court or Congress and say to that Congress, I didn't do anything wrong, or to a court, I didn't do anything wrong, you just waived your right. Now you're going to tell us what it was that you didn't do wrong so we can decide that for ourselves. So I hope she'll be brought back. Then we also had Mr. Douglas Shulman come in and testify, and what I was hearing as far as part of his testimony was, yeah, he knew about the illegality of what was going on, and he was trying to put a stop to it, and he knew that conservatives were being targeted. Well, let's face it, that means that this administration was using the IRS to help them win another election. Well, it worked. Now, how far up into the administration is what we need to know. But I don't believe we're going to find out from people like Mr. Shulman, who went to the White House, he said, over 100 times. And even though he's working for the president, and even though he started out under the Bush administration, that's fine. We've had people under the Bush administration that screwed up plenty of things too. But he's working for President Obama, comes to the White House over 100 times. No, there's wrongful conduct that's gone on at the IRS, and never says a word. Oh, I went to the, well, what'd you go for over 100 times for? Well, I remember going for an egg roll. Well, guess what? If you went for an egg roll, the president was out there. He normally is for the Easter egg roll. You wouldn't even say something? That man should have been fired. We shouldn't have clowns that will work at the IRS, no illegal activities going on, go talk to their boss, go to the White House over 100 times, and not even breathe a word of it. so their bosses know. I wouldn't want somebody like that working for me. If there's illegal activity going on and you come see me over 100 times, I would hope that during one of those times you'd tell me this was going on. Because if you didn't and I found out, you'd be fired as soon as I found out. And Ms. Lerner would have been fired as soon as we found out. But instead, what happens? Well, they plant a question so it comes out that way. So maybe the President will learn after we plant a question. Something is awry. Something is very, very wrong. And having had thousands of cases, criminal cases, come before my court, come through my court, you smell when things don't pass the smell test, and this stinks to high heaven. So, in the morning, I hope I'll have a whole list of Democratic colleagues that are ready to sign on to my bill so that we'll keep the interest rates for the student loans where they are, so that we don't push paying for the Obamacare slush fund onto the backs of students, and we then get time to put the student loan business back in the private sector so that the federal government can be the referee and monitor the lending institutions and the borrowers and be the referee. That's what we're supposed to be. And as far as the IRS scandal, Mr. Speaker, I hope and pray some consciences are being bothered and hounded in the IRS and over Benghazi and over the AP scandal, the abuse of process there, the abuse of process in going after conservative reporters, that consciences will begin to be bothered and they won't be cleared until they come forward and say, I'm a whistleblower, I have got to get the truth off my chest, let chips fall where they may. That's what I hope and pray for. And with that, Mr. Speaker, I yield back.
The gentleman yields back. For what purpose does the gentleman from Texas seek recognition?
I would move that we do now hereby adjourn.
The question is on the motion to adjourn. Those in favor say aye. Those opposed say no. The ayes have it and the motion is adopted. Accordingly, the House stands adjourned until 9 a.m. tomorrow.
Today, the House passed a bill that would approve the Keystone XL oil pipeline from